Hi, welcome everyone. If you sign up for the China's potential recovery and the spillover into Asia, you're at the right place. We're just about to begin, and today we have Dan Kiang of Aqua Lake, as promised, as our guest speaker. Welcome.
Thank you, Chief.
Then allow me to just do a brief intro, and I'll pass it on to you. Some standard disclaimer: this is a private, closed-door event, not for media consumption. If you are from the media by any chance, I don't think you are. Please disconnect or attend as personal purpose only. And today's information is for information purpose only. It does not constitute any recommendation to buy, sell any securities, and any information that construed as advice is general, impersonal, and not targeted for any specific persons. UOB Kay Hian may trade some of the securities mentioned today, and all information provided here will be subject to change without notice. And as you all know, investing involving significant risk, including the risk of capital loss, so be very careful. First, a quick recap of house view on China. I just updated our Hang Seng Index trading model this morning. Hopefully you have seen it. Going forward, we have two forces going together with the Hang Seng Index. On the top, we have the Trump 2.0 potentially capping the upside, while China's policy and macro data may improve, thus provide some downside support. So what is the new trading range? The blue line here is the Hang Seng Index from the last Trump victory in 2016, and the green line is the market after the onset of the trade war in 2018. And that gives us some reference of what will happen to the Hang Seng Index going forward. Long story short, we're looking at a range of 17,600 to 21,000. And that will also subject to change as the Trump news coming to impact the market. In terms of the core recommendations, we continue to suggest you hold or invest in the consumption as a long-term theme and try to avoid making frequent timing decisions. Even though we did give you a trading range, but that's just a reference. And given markets uncertainty, it's really difficult to time it at this point. And I gave you 5 stocks previously in our weekly ideas in our Wealth Monthly related to consumption. One of the big things here is the domestic tourism in China, and Trip.com, Sense China, Galaxy are all beneficiary of that, as well as China Resources Beer and Alibaba as beneficiaries of general consumption. Like I said, with me today is Dan from Aqua Lake. He has more than 20 years of experience managing billions. Actually, I need to correct myself. It's not billions, right? It's tens of billions. So Dan used to manage tens of billions of assets for a company called Ontario Teachers, which is a $250 billion US fund, pension fund, specializing in Asia and China. Previously, he was also holding senior roles in various corporate finance and private equity firms. So Dan, let me pass on to you to talk about your company.
Thank you. Yeah. Thank you, Chief. So my fund, very briefly, we're a Pan-Asia fund that's targeted toward countries across Asia. We're long-short, we're a hedge fund. But one of the things that's different to some of the other hedge funds is that we're very, we take concentrated risks because we believe that there's a lot of great companies or not so great companies from the short side where we will take particular higher positions where we think there's a amount of at least 15-20% of upside within 1 to 2 years period. In general, we also sometimes take certain hedging against certain market downturns, which we can talk a bit more about that later on. So, thank you.
So basically, is it fair to say you're basically replicating what you did at OTTP with roughly the same strategy, the same team?
Yes, that's right. With less money.
Not tens of billions, not 250 billion. Okay.
Yes.
But there's the reason I picked Dan also, I think there's a lot of consistency in the work you do in your team and also strategy. And we can dig that deeper into that later, including I asked Dan to give us some stock tips later this evening, and we'll get to that. And then if you want more information on Aqua Lake, here are some key points to remember. But I want to start with a conversation with you today. I guess neither of us is going to take too much time talking. One topic I think it pertains to the institutional investors, because you work for a very large institutional investor.
Yeah.
Your client base currently probably includes some very large institutional investor, and you probably talk to a lot of them on a regular basis, I assume. So, what is their current view of China? I think that's going to dictate, how Hong Kong is going to play out, because I could continue to see the lack of institutional flow into Hong Kong markets. You see the same thing?
Yeah, I mean, I think you're probably looking at it in a differentiated way, but I think you may not like my answer as much.
Yeah. That's the bad news, huh?
Yes. So Ontario Teachers, just for background, it's a large Canadian pension plan, and I would say that if I were to break it down by different regions, I would say that North America today is very challenging for markets here because
not just because of Trump.
not because of Trump, but just if you look at the U.S. performance, it's been fantastic, right, compared to some of the Asian performance. So that's that. But there's also the geopolitical side. I mean, I think you might have heard just recently Texas governor came out with this rhetoric about now wanting to pulling public money. So I would say North America, especially Canada, US, is quite challenging in terms of seeing inflow. We're not seeing that much inflow, especially from the onlys. I think Europe is a bit more optimistic, but they do want to see a few things. I just came back from London last week, and I think the sentiment there is better. But I would say that they're waiting to see if the China stimulus that happened in the last month or so are actually, you can see some real results, whether or not it's PMI, whether or not it's consumption confidence, or any type of real estate transaction volumes, real estate prices. So far, I think they're probably a bit more on the sidelines. I think it's mainly the Asian investors today. I think you see there's probably a bit of rotation into Hong Kong, China, and I think that's where I think we see a bit more optimism as well as a bit more confidence.
So I guess we'll not be marketing in the U.S. anytime soon. Have you been marketing in North America?
Not as much. We're a bit focused on the markets. The markets are actually very interesting today.
Yeah. Great. And what about your own view? So you just talked about your kind of the peer view or your client's view. And just to remind everyone on this call, these are all very big, will be like pension funds, insurance companies, sovereign wealth funds. You talked about endowments, right? Yeah. So the conclusion here is really that still a lot of challenges, but Europe and Middle East, we also, we talked earlier about the Middle East, that could be a source of money coming in, but not in a big way. What about your own view of China? Because today's title is also about the potential China recovery. Do you believe in the China recovery?
I think it's wait to see for us. I think the reality is, I think if you look at the stimulus that's sort of announced, at least it's a bit mixed in terms of both timing as well as the actual content, right, and how that's going to fill into going to local governments as well as into the real estate market. So I think let's wait till and see. But I think there's the way our strategies work, still very fundamentally driven. We're very valuation focused. Yeah. So I think we're seeing a lot of companies that we find it to be really quite attractive. And, I can talk a bit more about a few companies. But in general, China is cheap. It's cheap for a reason, but I think there are a couple of companies that, or a few companies at least, that we think will benefit from the current sort of environment, including the geopolitical environment.
Yes, that's interesting because you mentioned 2 points that are kind of consistent with our house view. Number one is Dan mentioned that the European investors or some of the institutional investors are waiting for more data.
Right.
So we've also been
good data,
macro data to come out. So that's something we've also been saying to people. And the second thing is the recovery. I guess it's could be bumpy, and the consumer confidence obviously is very important, real estate very important, and that's also what we are tracking. But what about the rest of Asia? Do you necessarily factor China into that, or do you have an independent view on Asia, regardless of what's happening in China today?
Yeah, I think, look, Western Asia, we're actually seeing a number of places where we find it to be very attractive. So to just take a step back, for us, we're very theme-driven or industry-driven, right? So, but we look at industries that actually impacts a lot of countries in Asia. So one of the industries we look at, for example, is semiconductors. That covers China, Korea, Japan, and Taiwan.
Yeah.
So there are certain sectors within these countries that we find it to be very attractive because they're essentially either dominate, they have a huge competitive advantage against all the other countries in the rest of the world, or they have a particular area where, because of demand, because of certain IP or government support, that they actually are just much more competitive.
Regardless of Trump.
Yeah, regardless of Trump. And sometimes Trump might actually help
the
overall situation.
It's a double-edged sword. Yes.
I mean, just looking at, like, for example, again, because our bottom-up approach in terms of looking at different themes, there are certain sectors, even Korea, right? So there's nuclear reactor kind of equipment maker in Korea. It's a company called Doosan. That's actually, and some of the Chinese guys as well, they produce a third of what the U.S. Competitors produce. So there's a lot of sectors, but we can talk a bit more later.
Yeah, you also talked to me about Japan earlier. I thought if we have time, we can certainly move on to those areas. And I do want to bring the Trump risk as a consideration. First of all, does that surprise you?
No, not
okay. And then would that change anything you do?
Yeah, I mean, I think we are, there are certain sectors we just don't want to.
Just don't travel to the U.S.?
No, I mean, traveling to the U.S. is fine. I think people are a little bit scared, but it's fine. I mean, but I think I think one of the things that, for example, like you have seen a couple of companies in the biotech space, right?
Chinese biotech.
Chinese biotech, especially Wuxi Pharmaceuticals, Wuxi Pharma, Wuxi Biologics. Some of these companies are just basically they lost their international business because of what happened in the U.S. So these are sectors that we try to avoid. So
avoid Chinese biotech, and you also we talked about earlier exports, right?
Yeah.
All exports or just certain exports?
Definitely certain exports, right? So today, I think Trump just came out with, I think he tweeted to say, I'm going to add 10% tariffs on all the Chinese goods, and then some from Mexico and some from Canada. So now, that being said, the one thing that, going back to our point, is that there's the number of these companies in China specifically that even with the tariffs, they're still making more money than the competitors.
Wow.
And so these are ones that hopefully we can find and we can back at reasonable valuations.
Okay, we should talk about that in a second.
Yeah.
And so take a step back. So we talk about the macro, talk about the Trump risk. How do you pick companies? How do you pick stocks? What do you consider on the long side? I know you're a hedge fund, so you swing both ways. But what would be a good company to own in your mind?
Yeah.
In the context of China and Asia, obviously it's going to differ from country to country.
Yeah. So look, one of the things that we learned over we made a lot of mistakes over our own career, is that when you're in the markets today, equity markets today, we always say you don't really pick the company, you pick the stock, right? And I think the differentiation is that, of course, you're going to go through the fundamentals of the company, but you also are looking at what they call catalyst, or short-term, or long-term, or medium-term.
Like a driver.
Stock driver. Or we call tailwinds or headwinds.
Yeah.
So I think these are extremely important in terms of that. So, for example, I would say that a lot of the Chinese companies, unfortunately today, are faced with tailwinds because there's a lot of uncertainty as to what's happening with the U.S. in terms of the tariffs as well as some of the restrictions.
Yeah.
So these are things that you got to be very careful. But there are a lot of ones that's actually hit a lot of tailwinds, like AI, for example, right? So you want to be able to go for these type of themes, and then within that, we can look for companies that we like.
Cool. So why don't we just talk about some companies you like? Sure. Today's theme is really about, first of all, think about whether China's recovering. We agree that's going to be a bumpy road. But it's just like Dan said, you tend to focus on things that not so much macro related, try to be
Yeah, I mean,
more defensive,
we call it macro aware,
macro aware.
but we're still very fundamental driven in terms of the companies we pick.
Yeah. So one of the first stocks is Miniso. By the way, this is also covered by our institutional analysts and one of our topics in the Chinese consumption sector, and Dan happens to like it. So talk to us about that company, please.
Sure. So look, Miniso is a sort of a cheaper version of Muji, if people know it, or Dollar Tree in the U.S. Right? They're essentially these are smaller formats, roughly about 1,000 to 1,500 square foot stores where they sell, reasonably $1 US to $10 US type of goods, from scissors to various small items. It's a Chinese company, but today, about 60% in China, but they're growing really their international business. So they're really growing their business in Europe, even in parts of the US, as well as across the country in South America as well. We like this company. If you look at valuation, it's a very simple concept. This thing we think is growing at 20% earnings a year, but it trades today at 12 times.
Wow.
Right? So
Good cash flow.
Good cash flow. Obviously, decent margin. Their international business is actually having probably slightly better margin, just because they're selling their goods at either higher price or they're compared to the local competitors. So that's really one company that we feel pretty comfortable.
Got it. So it seems to me this is a company that will benefit from a potential China consumption recovery as well.
Of course.
Yeah, and plus you said about the global export, global expansion. Would that face some kind of Trump risk?
Potentially, but I think the items that they sell, these are very, very simple consumer
Low ticket
or consumer products. And I think a lot of it they have a lot of franchisee stores, which means they just sell their products, but it's the local partners that actually set up the shop and sell through it. So there's a lot of dependency on the local partners for their business.
Good. Any price target on the company? You like to own it forever.
We're definitely not.
Why not? A good company,
Yeah. But I think for us, you actually mentioned a good point. For us, is everything's an opportunity cost. How we look at it. Right, so we always have a saying: the best time to sell something is when you have a better company to replace it. Yeah, right. So so
that's our kind of philosophy too. We in-house we have something called the core recommendation. Sometimes we take stocks off the core recommendation, not because the stock is bad or not attractive. It just there's better opportunities.
Exactly right.
So recently we took multi off the table because we think, China resources beer might be a better choice because of the consumption downgrade. So talk about multi, I think that relates to the next stop. You're going to tell us. When I first heard it, I was really surprised. Actually, a little bit disappointed because I thought it was too well known, but I could be wrong because 10 years ago when one of my analysts at China Everybody pitched to me the multi, I thought was too
boring.
Too boring. So today, let's talk about HSBC.
Yeah.
This is another boring but potentially interesting name going forward.
That's right. And I think it's something that probably makes you sleep better at night than holding something like a Miniso, to be honest, right? So, but our thesis, look, everyone knows HSBC, so I won't dwell on business. But our thesis is very simple. If you actually looking at, again, it goes back to our valuation. HSBC today trades at roughly about 6 times price to earnings, and 0.7 times price to book. It has mid-teens ROE, which means the book is actually producing pretty high levels of returns.
Yeah.
If you look at their comps, which I didn't include in our slides, but a comp like Citibank, which is obviously bigger scale,
yes,
but also not much growth, it trades at 10 times price to earnings.
And probably close to 2 times price to book.
That's right.
JP Morgan is definitely more expensive.
Yeah.
I mean, all the American banks.
That's right. I mean, you can argue JP Morgan is a slightly better bank and things like that. But also today, HSBC trades at or gives you an 8% cash dividend, right? So,
and buying back shares.
Right? So, I mean, this is the base case scenario. You sleep at night, this thing gives you 8% return, right? Higher than what interest rates. Now, the other two things that's happening, which we think are going to be pretty positive, is that we're always hoping for the China stimulus. If that comes through, it's going to be a positive tailwind for that stock.
Makes sense. Makes total sense. Yes. They're a sizable business in China.
Exactly. Yeah. And then the other one is that the new CEO has announced cost. I don't know how that's going, to be honest. I don't think you will know, but at least it's trending toward the right direction.
It's interesting because most Hong Kong investors will buy this to collect the yield, but you're arguing that there might be a growth story or some kind of a resumption of growth story?
Or a re-rating.
Re-rating story, makes sense. Yes.
So if you look at, my chart on the bottom right, if you look at the blue line, which is a PE, it's a historical PE. It's actually trading at a very low, historically, the PE levels, where the yield is actually historically high level.
At the 100%. Yes.
So
while both U.S. and China cutting rates, which make them the yield even more attractive.
That's right. And then hopefully the yield gives you 7-8%. The re-rating, even because you 5 to 10%, you're looking at a very reasonably safe bet of
double-digit return.
Yeah, for a company of this size.
No, HSBC, I buy that story. When I first heard it, I thought it was too much, too common.
It is boring, but
hey, boring is good in this. So you own both stocks today?
Yeah, we do.
So let's talk about a stock that kind of fit today's theme, which we argued earlier that you also said the same thing, that there might be some interesting Southeast Asian opportunity that will benefit from either the trade war or China's migration of manufacturing. But you told me that you don't own the stock anymore.
Yeah, we don't. So
Okay.
again, we're not giving investment advice. So I'm just giving you a sense as to this type of things that we've been looking at, especially Southeast Asia, which we find it to be really interesting given what's going on.
So tell me about this. Is a Thailand company, right?
It is. It's a Thailand company, but it has operations in both Thailand and Vietnam, right? So we do a lot of on-ground due diligence, and so when we were looking around to see different themes and different companies, we came across this company when we were doing on-the-ground diligence. And one of the things that's really interesting is that because of geopolitics, a lot of manufacturing companies across the world, especially with manufacturing based in Asia or China, they're trying to diversify. And so they're going to Thailand, they're going to Vietnam, they're going to different regions. And this particular company helps a lot of these manufacturers to develop industrial real estate, as well as putting together utilities and all that types of different type of value add. And so over time, we think that they're going to continue to benefit from this sort of inflow into the non-China lands in terms of building more industrial type of capabilities for a lot of companies.
And their customers are mostly Chinese customers?
Global customers. No, the one thing I will say is that the reason we're not in it is that we're sort of waiting a bit to see what's going on in Thailand, right? Because it's a large base. There is, politically, Thailand hasn't been the most stable. And so we're just sort of waiting to see when things get a little better and when the market gets back in terms of focused on reinvesting.
Got it. We're going to keep the conversation going. Before we go on to the audience Q&A, I just want to remind everybody, we are going to host a investor lunch with Dan and his team in Hong Kong on Tuesday, December the 3rd. That's exactly 1 week from today at the China Club. You're more than welcome to sign up. First come, first serve. We already got a few sign-ups, and my understanding there are a few limited seats left. So if you like what you heard so far, we're going to continue the conversation and continue Q&A. But if you like what you heard so far, you want to hear more about Dan's thoughts and strategy and stock picks, not only for China, but also Asia, including Japan, please join us for the lunch. We'll have a more detailed discussion, in-person discussion. And then I do have a bunch of other questions, but I also want to leave some room for our audience to ask you certain things. One of our investors who could not attend this event today want me to ask you about Alibaba. I'm sure everyone on the call wants to know. So let's talk about Alibaba. Let's talk about Tencent and the whole big tech space in China. Do you like it? Do you own it? What's the future of these companies?
Yeah. So one of the things that I want to be very specific is that I don't think you can group one tech as one sort of group. We do own Alibaba.
Oh, you do?
We think that there's some upside. I think they are, in a way, they appointed a new CEO for their e-commerce.
E-commerce, yeah, just a few days ago.
Which is suffering a little bit. But I think I do think that with what's going on in the AI space, there's probably quite a bit of room for the AI cloud business. Right? They're by far the leader. There's a company called Kingsoft Cloud. You can take a look, but their price has tripled in the past.
Much smaller than.
Much smaller, yeah. In the past month or so.
Yeah.
And so that's that. But then also I think Alibaba in general, they still have a lot of cash, huge amounts of cash flow. They can continue to do share buybacks, right? And some of their other business, every single tech company's building their AI capabilities, right? So, and the valuation in Alibaba is
Well, of course.
very reasonable.
Cheap
So,
for a very long time.
I wouldn't say it's as, it's something less boring than HSBC, but
Cheaper than HSBC.
cheaper than HSBC, yeah.
Valuation wise.
And it's definitely has a bit of a kick to it, right? In terms of some of the things that it could do to make it more growthy.
So you do expect them to turn around the e-commerce business at some point, I guess?
I don't know if I expect them to turn around, but I think at today's valuation, I don't need them to do a whole lot, right?
Not even. Yeah.
The market is growing. E-commerce market in China is growing about 6% a year. They're doing about 3%. So if they can get to 6% just in line with the market, that's pretty good.
Yes.
Right?
Plus, like you said, there's the AI and the cloud business
That's pushing.
definitely not in the price.
Yeah, exactly.
You probably buy the stock today and get that business for free.
Yeah, no, that's true. And then they got a couple of other investments, like Galdo, which is a really good map
Yes.
business. So,
What about Tencent?
Yeah, Tencent's a little bit controversial. Look, I think it's a great company. We used to own it. I think one of the issues is that I almost want to say that there's a lot of areas that Tencent can actually grow faster, right? They could easily leverage WeChat, but you just haven't seen them able to or want to push up that growth.
I get the sense too. They're like,
and so I feel like they just wanted to, meet their estimates, but they're not going to surprise you to the upside.
to be too aggressive with restructuring or reorganization or position himself for other type of growth, right?
Yeah.
So for online gaming is the majority of the business.
That's right. But also, I think their social media business, they could really kickstart, a massive, sometimes a bit of a growth, right?
Yeah.
Both charging people for some sort of a WeChat services. So, as well as their financial business, WeChat Pay is great, but you haven't really seen them doing too much on the monetization.
Yeah, it's kind of a status quo. And what about Pinduoduo?
Pinduoduo is very controversial.
Yeah.
We don't own it.
Yeah.
I think the best way to describe Pinduoduo today is it's unpredictable, right? I think, I don't know, Chi, maybe you should tell me, but how many...
I don't like the company either.
Oh, yeah. But how many companies in the world, in your 20, 30 years of investment history, can come out and say, I think our earnings are going to likely decline?
Yeah.
I don't know.
And they don't care. They don't seem to care about it.
Yeah. And so, one of the issues that, we were just chatting about this is that you want to be aligned with the shareholders. Yeah. And so when, in a way, you don't feel to be very aligned, right? So owning something like that is dangerous.
I totally agree. Okay, so let's take a break here and see if any questions for either me or Dan on China, Asia. Unfortunately, today's topic is really focused on those two things. We cannot take any U.S. questions. We'll save it for a different occasion. So if you have any questions, please use the chat window to enter the question in text, and we will answer them in the order that it convenes. So Dan, while we're waiting for the questions, we talk a lot about on the long side. I know you're a hedge fund. So is it fair to say when you pick the stocks on the short side is kind of opposite of what, like you talk about, the things you like about a company, that's good. But, so you kind of flip the coin and do the other way?
Yeah, absolutely. Absolutely. Look, we do a lot of, we look at a number of sectors where we think there's a lot of headwind, where I think the shorting is interesting. I'll give you one example, and we'll talk a bit more. We are pretty negative on Japanese autos.
Okay.
Why is that? So it's a sector that's a couple of things. One is that there was an article recently that talks about a BYD car and a Japanese car. And basically, if you open up the BYD car, everything's very integrated, which means they save costs. And that's why BYD can price cut a lot of Japanese cars. So you open up a Japanese car, it's got hundreds of parts, it's sourcing from different suppliers. And by definition, it's more expensive, right? And I think the Japanese autos haven't turned around. So if you look at the recent, there's an activist that came into Nissan recently. Obviously popped the stock up, but it basically tells how a direful situation some of these Japanese auto guys are facing because of the global competition as well as slowdown in global demand, especially on ICE cars. They really haven't caught up on the EV, electric vehicle sector as much.
So would you long the Chinese EV on the other side, or not yet?
Not yet, but look, we really like BYD. I think BYD, I think across the world, they may not be able to sell in the US, but in South America, in Europe, even with the tariffs that's giving BYD, BYD still makes money in Europe.
Yeah, it's a monster. I think I also believe BYD will be one of the winners after the washout of the Chinese EV space, because obviously there's overcapacity.
That's right.
And there will be rationalization, M&As, and company go out of business, and BYD will be. What about Xiaomi as a new entrant?
I think Xiaomi has a chance, but at the same time, China is very competitive, right? You got Xiaomi, the other big player that people haven't really heard too much about, but it's really coming is Huawei. Yeah, right. Huawei is working a lot with a lot of Chinese OEM makers. So
unfortunately not listed. Okay, so let's move on to some audience questions. Thanks everyone for asking the question. In the past, we always get a lot of good questions, and we try to answer them as much as we can. So first question is on Asia outperformance versus Hong Kong. I guess it's yes or no. It depends. On the recent downturn, yes, Asia outperformed, but on the upside, I think Hong Kong actually outperformed this time. But anyway, Dan, do you have any thoughts on Asia? Do you have any onshore investments in China?
We have one today. But in general, I think I don't have a particular view on whether Asia is going to move up or down, but we're just very company focused today.
Got it. HSBC seems to be range bound. The latest cost cutting is very exciting and the share buyback. Is that more short term, or do you think there's a long term story? And then what is the target? Any price target on how would you value that?
Again, no investment advice, but I think for us, we think 8% yield plus a re-rating from 6-7 times to even 8-9 times is roughly about a 15% to 20% upside.
Got it. And you do sell them when they reach the target.
Yes. Or if I see something better, then I have to sell them. That's right.
That part I like. I think investors should also take your, because I think most times people are kind of married to the stock, right? They're so self-indulgent in the stock. Like NVIDIA had kind of have that attribute today, like if people think they can hold it forever, but today we're actually telling people to watch for the risks. I'm watching for the risks on NVIDIA every day. Okay, do you short to hedge or generate alpha, and how do you size the position? That's a great question.
Great question. We short to make money, so we short to make alpha if we can. We do hedge a little bit, but mainly we have a short book essentially to make money. Shorting is much tougher, so we generally make it much smaller size. Like our long position could be up to 10-15%. For our shorts, normally at best 5%, normally 2-3%.
Got it. And the net is how much?
Net depends, but normally today we're pretty low net. We're about 20-30%.
That's a target on target, or?
Yeah, but our range normally could be from 30 to 70%. I wish we were 70% when China was booming back in late September.
Yeah. How did you do it in that month?
We were up about 3%.
Well, that's not bad.
Yeah. But we also were wary that the announcement can come, but the markets will react. differently because there could be something that's not as complete.
So next question is, I told you this is going to get people's interest is the big tech space or the internet space. So two stocks that we didn't talk about, JD.com and Meituan. Yes.
Look,
do you own them? First of all, do you own them?
We don't own them. I don't actually have a view on Meituan. On JD, we think it's interesting, but we think that it could be a little bit cheaper before we can pick it up. Because JD is actually pretty stable, right?
Yeah.
They're growing a little bit higher than Baba on the e-commerce side.
Yeah.
And they're pretty competitive. But, they become, in a way, just a stable stock versus something that's super exciting.
So next question on China's policy. Look like investors expecting Chinese government to have a bigger stimulus. So I think we talked about this earlier too, that, when we have the coffee, that, you also believe that investors are looking for a bigger stimulus, right?
Yeah, I think everyone's hoping for a big stimulus, but I don't think it's going to.
Do they have a number in mind, do you think? Or do you have a number in mind that would satisfy you?
I have a number in mind that satisfies me. I just don't think it's going to come anytime soon.
Yeah. And how committed you are, I think, that China is to save the economy? Because there are a lot of tech fakes in the past. They talk and then they underdeliver.
Yeah.
Do you think that's the case this time?
Well, so far, I think the market is reacting this way.
Makes sense. Yes. Just to offer my 2 cents, I don't think China is having the head fake. They do have a genuine interest in saving the economy. I think one of the stats we should look at, I'm not sure we talked about this on the CIO series, is China's finance situation. So as of September, China's tax revenue at the central government level just fell off another cliff. So that means that not only real estate suffering, consumption suffering, manufacturing suffering, but the Chinese government is also suffering from economic slowdown and deflation. So they're actually feeling the temperature, feeling the pain themselves. That's the reason I think this round of stimulus came so quickly, right after September. And there's led to it because I think the government now has a vested interest to fix the economy in order to make their tax revenue back. And there are real numbers supporting that. Real estate tax, corporate tax, value-added tax, all are declining with the exception of consumption tax kind of held up. And I can still kind of show you where the relative bright spot going forward is still the consumption. And that's why we continue to recommend consumption, not only as an investment theme, but it's also something that will interest the government because that will allow them to collect more consumption-related tax.
It does seem like today the Miniso and CRB are more lower-end consumption.
Yes.
Right, and higher.
That's right. So that's interesting. So, China is still an emerging market country. So I think the low end matters. Even though everyone seems to think that, every Chinese buy LV bag. That's not true. Another great question, the activist investing, do you think it works in Asia?
Yeah, look, when I joined Ontario Teachers 10 years ago, right, the group that we have is called.
And so it's not the type of Bill Ackerman type of activist, but I think there is an angle where you can work with the management to improve things. But I wouldn't say a harsh activist to go and change the board and things like that work very well. Part of the reason is, a lot of families control these companies, so you can be activist. It's harder to, how do you get rid of a majority owner?
Exactly. So. Yeah, my 2 cents on that as well, because I used to work for Elliott, which is activist farm. You're right, you hit on the nail on the head. It's about ownership issue, we call it promoter shares, or what do you call the majority shares. You look at Microsoft, if you own 20%, you're going to be like the biggest shareholder. So all single digits, even the founders own single digits, versus in Asia, China, oftentimes, sometimes it's a state that owns 51% or 60%. Or a family or majority of the shares, and you have this share placements and rights offerings and all these things that dilute you out. I think it's going to be very tricky, and then the legal system also is very different from the West. Even though you can say Hong Kong is better, but I'm not sure you remember case of the PCCW privatization deal that, actually went to the court and the results were very surprising because the laws is here that work very differently from the West. Next question. There's a question on the leverage ETF. I don't know what that ETF is.
Yin, I know Yin and Yang.
It's actually called, but essentially they're 3x the KWEB ETF. So it's levered ETF. I don't necessarily have a view, but if you want to be very aggressive on shorting
the China tech,
or longing,
it's a leverage. So this is not really a view per se. This is just an instrument for you to express a view, depending on whether your view is really anti the internet usage. But our conclusion so far is that it seems like we're both like Alibaba, at least for the long term, and we're not so crazy about Tencent.
Yes. And I do like your Macau picks. I really do. I actually, we do track Macau quite a bit. Part of the reason is to see it's a bit of a China tourism and consumption as well. And I think Macau October numbers wasn't as great, but the November numbers actually is looking better. So
that kind of shows you the problem with the economy too, right? Is that the reason?
Yeah, the issue with Macau, and I think people need to be careful, it's not so much people can just come to Macau. So one of the issues that is, there's the two things I think people need to be aware. One is that the tourist visas, sometimes they go loose, and then it's been a lot of issued, and you see Macau coming back. Sometimes the government will put a hold on it. The other is it's Macau's 25th anniversary this year.
Yeah.
So President Xi is actually going to Macau in December.
Oh, I didn't know that.
Yeah, he is.
Okay.
So I think December, sometimes middle of December.
Yeah.
So I think
he hasn't been since the new term, right? Since
he might have at least maybe once or twice.
Okay.
But I think this is a big event.
Signature move. Yes.
Yeah. So you can interpret it however you want, but it is a big event.
Originally, I thought that Dan and I can disagree on a lot of things, but in fact, we accidentally agree on a lot of things. So
From a different angle.
From a different angle. Yeah, that's our value offer to you. Today is not necessarily give you specific stocks, but really to show us our thinking and you decide whether it makes sense or not. Okay, next question is on the data center and AI training.
Sure.
In Asia, I know Singapore Telecom is very active in this area. In fact, they did a deal with BlackRock, with Blackstone on the data center.
Okay.
And also we heard that Microsoft moving to Thailand, moving to Indonesia, either for the low electricity or whatever. So do you see that same trend coming in, and is anything investable there?
Yeah, no, well, to be fair, we haven't really spent too much time on data centers, but I think it's all about valuations. I think the demand is definitely there. We spend a lot of time on looking at servers, that Taiwanese servers. There's obviously some U.S. servers that are produced in Asia. There's a company called Celestica that actually we used to own. It's a big position that we have. We sold out, but it's the price has gone almost triple because they do a lot of service. But I think in general, I think this is definitely a space that we're looking into.
Yeah, and my 2 cents, China Mobile is in the space, even though it's still a small percentage of revenue. So China Mobile is our core recommendation. You buy China Mobile for the stability, for the defensiveness, for the 8% dividend yield, 7% dividend yield, but it's going to go to 8%. And one thing I do want to relate to the macro picture of China Mobile to the overall China is, remember, we had this local government debt swap, right? A few weeks ago, a couple of weeks ago. And people were skeptical whether this works or not. So let me tell you, for China Mobile, it's already working because in the latest quarter, they're already seeing better cash flows from data center related to the local government entities. So they actually do a lot of business with government. And because it's a debt swap, allow the LGFVs to pay back their China Mobile dues or whatever. So there is an impact. I do believe that's a bottom-up concrete evidence that this policy works. Outlook for Ping An, yeah. So Ping An is also an investor in HSBC. Do you look at that one?
No, well, we don't look at, but I think I saw the question. It's Ping An and AIA. So that's
yes.
definitely a space that we look at.
Okay.
Today, we don't have a position either. I think Ping An is obviously cheaper than AIA, but I think right now it's not a space that we want.
Any particular reason? Too complicated?
Yeah, I think too complicated on two things. One is that it's unclear how the demand is going to continue to look for insurance companies on the, just what we call value of new business. But the other is, some of their books, people are a bit worried, right? Because you have a lot
Real
of
estate?
still quite a bit of real estate exposure. So.
Any view on WHA? I don't have a view on that. Do you?
Oh, Wang, you mean? Yeah, I don't. I say today, I mean, again, it's not so much about the company, but it's more about the country risk of Thailand today. I think we just have to be a bit more careful.
The next question on the capital gain tax rumor, I don't think, well, first of all, we don't comment on rumors, but if you think that's a possible scenario, I don't think that's possible. Even though it will help the government to regain the tax revenue, as I mentioned earlier, we have a bit of a crisis in terms of the tax income of the government. I don't think they go as far as to collect the capital gain tax. I think if the market comes back, the stamp duty alone on the stock trading is already enough to support that.
Yeah, look, I think it's hard to say, but what the thing I will say is that in Chinese there's something called 精算四期, which is a wise system of
Corporate tax.
Corporate tax, or just the government now has big data to know
Yes.
your assets and things like that. So I think it's easy for them to levy certain tax. But one thing they haven't done is property tax, right?
Yeah.
Where you think it's actually pretty simple thing, but they just haven't done it yet. So I wouldn't say the equities would be before property tax.
Got it. So the next question on the government's unwillingness to launch the big fiscal stimulus. Actually, let me answer that. I think there has been a pretty big fiscal stimulus. If you look at the fixed asset investments year to date, the government, including local governments, continue to pick up the slack. So the reason that the economies continue to weaken is because we still have very weak real estate investments and weak private investments. So as much as the government has been trying to lift the heavy weights, it's still not making a big enough difference. So I would say, I would beg to differ that China is being pretty aggressive in terms of, in fact, it's probably extended extreme in terms of fiscal stimulus. And like I said earlier, that the government maybe did not feel as much as pain as the real corporations in the economy until now. The government feels that the tax revenue are coming down, they need to fix the economy. And I do agree that consumer confidence is an issue. I also believe government realized this is an issue. So they try to fix that with a higher stock market, supporting the real estate market, cutting the mortgage rates, and a bunch of other policies.
That's right. Yeah, I mean, look, I think one of the things that people, people should understand is that they're trying to see the sort of after effect of what they just have done. Yeah, so it's going to take some time for them to see, is it working, not working, how much is enough, where should I channel this? So,
that's a good point.
That's I don't think they're going to go one big bazooka and hope for everything's going to.
Especially with Trump, right? It's so unpredictable. So then you decide whether Trump's going to deliver everything he promises. I don't think so. That's right. And so there's another thing to mention. So by following our PWM research, you will get in touch with all the upcoming important geopolitical events. So related to what we just talked about now, what Dan said is consistent with our view is that the Chinese government's taking a wait and see approach, at least wait into January when Trump takes office to see what he does. Number two, we do have a number of other NPCSC, called the National People's Congress Standing Committee meetings coming up. There will be one in December again, and there will be one in February. And then in March, we will have the full session of the National People's Congress to discuss China's economic plan. So we will have plenty of chances for China to plan, communicate, and execute the next stage of the stimulus. It's not like the Chinese government has stopped thinking of doing it. They just, like I said, or like Dan said, that we need to, wait and see and especially when Trump takes office, what kind of tricks he's going to pull. Okay. So one last internet company, Baidu. We covered all now.
I know.
Alibaba, Tencent, Baidu.
Yeah, we don't cover Baidu, so I can't really make comment. But I would say that Baidu wouldn't be my top choice.
Okay, a bunch of questions on Ping An Insurance. We're going to talk about that. We will not answer that again. And any interesting ideas in South Korea, Singapore, or Indonesia? You talked about nuclear energy earlier.
Yeah, I think it's more about valuations. There is we do like a memory maker called SK Hynix.
Yes.
They actually are winning that battle against Samsung today. So
Because of HDM, right?
HBM, yeah.
HBM.
Because of AI-related memory, high bandwidth. And then in Indonesia, look, we're pretty constructive on Indonesia. We are a bit concerned about the currency overall, not just Indonesia, but across Southeast Asia, especially when it comes to U.S. higher tariffs and likely for some Asian currency depreciation. So you have to be watching out for that. But there's a company called beneficiary which we like in Indonesia. One of the largest bank, growing at 15% a year, trading at low teens price to earnings.
Okay, so any nuclear stocks in China that you're monitoring?
We are looking, but there's really not too many.
Okay.
I think there's one that's not on the sanction list. I think the other one is on the sanction list.
Yeah.
So,
And we talked about some. Did we mention server names? I don't remember we talked about that.
Well, I didn't mention a company called Celestica.
Oh, Celestica.
Yeah,
That's an
but,
EMS.
Yeah, EMS, but it's actually listed in Canada. But I think that price has been pretty expensive at today's price.
Yeah. The next question is also, actually, I want to ask this question to you too. So your strategy, let's talk about your strategy a bit more. Is it predominantly shorting China? Because it could be the way that because shorting requires liquidity, you could just have a fundamental view or sometimes just end up having shorting China because just the most liquid market is still Hong Kong, China.
Yeah. Again, I think the way we look at it is that we have a long book, we have a short book, right? Okay. They not necessarily have to be correlated. Obviously, we try to hedge out some of the long risks. Yeah. But I don't think I actually mentioned that I was shorting China. I was actually saying that we were short Japanese autos. Yeah. They're obviously, going down the road, if we see an opportunity where there's a big dislocation that's happening, we would. But like today, I know I said I don't like some of the biotech-related Chinese names, but I wouldn't go and short them, right? Because
it's volatile.
It is very volatile, and they could be acquired, things like that. You just don't know, right?
You never know.
You never know. And then who knows? Trump strike a deal with some of them, and the stock would move 20% up. So it's not something that when you're shorting something, you just don't want to take on these type of idiosyncratic risks.
Why biotech? Don't you think AI will be more impacted by the Trump?
Yes and no. So it's a very good question actually, Chi, because of the bifurcation, you're actually seeing, for example, one area that we're seeing huge amounts of Chinese supply coming online is memories. Slightly lower end, we'll call it DDR5, right? And they're actually flooding the market because of what's going on in the geopolitical sector. Now, we're not taking exposures in these type of companies yet because they're actually trying to lower their prices, so their margins are actually impacted. But it doesn't mean they're not terrible businesses. SMIC, for example, there was a news come out that they're actually going for 5 nanometers, right? So I wouldn't actually say that because of Trump, you should short some of these companies that's not able to get the best IP from the U.S. because they might compete in different ways.
Well, because when I say AI, you also talked about AI earlier with Alibaba. Do you think they will be negatively impacted by any Trump-related? No, Biden is big on tech war and export controls and sanctions and NVIDIA chips and things like that.
For sure. But it's not a coincidence that Jensen Wang was in Hong Kong 2 days ago, right, taking the honorary degree.
Okay.
I think there's been, I don't know if it's a rumor, it just said they're trying to come up with NVIDIA chips that sort of bypass or at least fit the U.S. Descriptions that allow them to sell to certain countries.
Okay, again, if any more questions for either me and Dan on China, Asia, please use the window to enter your question. And we almost finished. I think we finished all the questions. But one big topic we haven't had a chance to talk about today, and I'd like to spend the last few minutes maybe just to kind of scratch the surface, if you will, is Japan.
Yeah, sure.
Do you like Japan? Do you invest in Japan? And
We do.
maybe start with a macro picture. What do
Yeah.
you think is happening there?
So, look, macro picture wise, I think in general we like more domestic Japanese names because we think because of what happened in Japan, Japan is slowly coming out of its sort of deflation and coming back to inflation, right? So that allows a lot of domestic names to actually benefit from demand increases. And so, but we are in a way looking at some of the international names where the Japanese players are less competitive. Japanese auto is one of them.
As a short.
As a short, yeah. So it's really company in certain sector dependent.
Do you know anything in Japan today?
Yes, we have one company that we've taken a very big position. It's sort of a media company. It's actually related to YouTube. And
Tell me about that, please.
Yeah, I mean it's essentially
Japanese media company.
Japanese media company. They create avatars.
Okay.
And they are one of the biggest sort of what do you call it agency companies, right?
Yeah.
So anyone can make an avatar, but they help you to brand it in YouTube or some of the other platforms globally,
Okay.
not in China, but other globally.
It's like a facilitator, incubator.
Yes,
Okay.
so to the and can sort of spend a bit more time later on, but I think to us it's a really interesting play because they essentially own the top 70% of the top 100 avatars
Globally.
Globally, yeah.
Wow. Is that a small cap, mid cap?
Mega.
And only in Japan.
Japan, yeah. And then we're also looking into some of the Korean K-pops and things like that. It's a pretty simple theme. I mean, no different from the nuclear reactor producer. They're exporting.
I don't see that it's coming out, but maybe you do.
No, it's just essentially Korean production capabilities exporting
What they're good at.
what they're good at.
They're good at nuclear, they're good at HDN, and also good at
And
K-pop.
they're good at a lot of things like weapons.
Oh, yeah, I'm
people don't look at that, but really, I mean, I think the Kia and Hyundai cars are actually doing very well in the U.S. as well. Right? So.
There's a new question coming on your credit strategy because you did say that you have a combination of mostly equity, right, and then what liquid credit, and that's only Asia or globally?
Asia. So my fund is Asia, so I don't do global. Okay. But one of the things that we see is that in Asia, that's a big advantage in Asia. That dislocation happens. Whether or not Miniso happened actually a while back. Especially, we've seen a couple of bond issuances, especially in Hong Kong, where family-backed real estate companies really got sold off. And then it becomes very much like equity type of returns. So this particular real estate high yield bond that we picked up, a lot of people, it was so oversold by a number of the banks, but we felt like the government, as well as the company, because it's SOE owned, is going to be able to rescue that company from a liquidity point of view. So we bought that at 70, 80 cents a dollar, and now it's at 90 cents a dollar. So we already made 10, 12% in the past 9, 10 months.
And that was not IG, right? That's more like a
it's high yield. It's high yield, yeah.
It seems to me that you're leveraging the same bottom-up analysis, but you just apply to a different asset class.
Yeah.
Makes sense. And obviously we cannot mention the name because credit is more like a professional investor game. But what's your general thoughts about bonds and fixed income in the region? And can also tie this to the US dollar, because you mentioned earlier about Indonesia may benefit from a weaker currency because
or suffer, depends on the business.
Okay.
But I don't we don't spend that much time in bond and fixed income unless we saw some sort of dislocation in a corporate bond. I mean that's probably what I can say.
Okay, I think we answered all the questions. I want to thank everyone for participating and asking all the great questions. Again, if you want to know more about what Dan's thinking about the strategy, the Asia investments, please join us for the investor lunch next week in Hong Kong. And I understand you also travel to Singapore. We have a large number of people from Singapore and Malaysia on this call. So we make sure to inform you if you're in the region. Maybe you can also do an offline event with some of our sales and advisors and clients.
There's something called free lunch.
Okay, then we'll give you free and free ideas. And I already learned a lot today. I want to thank you
Thank you
for coming in.
No, thank you for inviting me.